Hey everybody, happy Tuesday. How's it going? Let's see. Yeah, I think we can get it kicked off. So today's agenda is somewhat lighter than normal. That'll leave us ample time to just talk about whatever. We do have some important stuff to cover, but compared to recent weeks, it's not as crazy. One thing I just wanted to call out, I see Gray Machine in the audience there. Guys, if you want to see an amazing summary of what Foxy is, Gray Machine put together a really professional and slick and amazing video about it. I love how it's geared towards people that don't necessarily, they're not necessarily degens. They just want to grow their Fox. It's just wonderful. So that was awesome to see, Gray. It's cool. I think, as word spreads about what we're doing here in these crazy ShapeShift, in the DAO environment, these wonderful experiments and doing smart things with Fox and generating value for the token, the world is going to start to beat a path to our digital doors. What else? So the TMDC was just having some interesting discussions pertaining to Foxy. We don't really need to rehash that right now, but again, just a reminder of, this is an important function now of what the TMDC does. Per the Foxy proposal, us and the TMDC deliberate on important things things like early withdrawal fee and when is the epoch time or things like that. Really fine tuning the contract. There's probably going to be a lot of this in these early stages as things really get running and get more momentum, and then over time they'll require tweaks as well. But it's fun to dig into that side of things. We also have the All Fox tomorrow, which for those of you who aren't familiar, at Centralized Shapeshift, this was a monthly thing we did. We would all gather in the large kitchen we had, crack open some beers. Some people would run out to the parking lot and smoke some weed first, as is tradition. And then we gather in there and talk about the monthly results. What does our runway look like? What's been happening with the different teams? So this is so cool. We're bringing this back tomorrow. It's going to be fun. Of course, we'll talk tokenomics as well. Those of you who listen to this chat every week will already have a pretty good idea of what's going on, of course. But tune into that because it's just a fun sort of summary of everything we're doing. And the first one we've done is a DAO. So let's check the chat. The Judge Judy getting high. Cool. So in terms of the agenda, we had a cool vote passed today. This was the approval to sell a certain amount of Fox via Hedgie. This has been a long and very careful and deliberate process, and it's really cool to take this, to have this voted on at this point. So specifically, we're going to be using Hedgie to sell up to $500,000 worth of Fox for USDC. 75% of that is going to be on mainnet. Hedgie also has a presence on Gnosis chain, and we're going to target 25% sale over there as well at an 8% discount and a 18-month lockup. So right off the bat, you can see some favorable attributes of this. Fox isn't hitting the market, obviously not immediately. That's a downside of selling Fox on the open market, of course, and we've never done that. But it has a much longer hold time than even Olympus, which is just a week. So this will be exciting to see what happens. This is our first foray into it, and it remains to be seen if there will be sufficient demand. We may have to tweak those terms, based on how things perform. But in any case, it's going to be really nice. This could be a super important tool alongside our Olympus Fox to USDC bonds to earn stable coins. Speaking of stable coins, one thing I was going to bring up with the TMDC, and we didn't get a chance because we got into the Foxy stuff, but I've been thinking there's a non-zero possibility that the DAO could get rugged, by Circle. Of course, this is it goes back to those trade-offs of stable coins. USDC is it has a low risk of being depegged. They're pretty above board with this stuff. More transparent than, say, the other centralized alternative, big centralized alternative, which is Tether. It's unlikely that you're going to wake up one day and it'll turn out that Circle doesn't have enough USDC to back it, and it's at 80 cents or 50 cents. On the other hand, it is centralized, so we are prone to arbitrary decisions by Circle. And again, there is no reason to suspect this could happen, but it's a non-zero possibility where maybe the DAO ran afoul of some sanctions blacklist somehow, or God knows what could happen. When there's centralized entities, and of course the various three-letter agencies controlling these things, you never really know. I think that's extremely unlikely, but we do hold most of our value in USDC. Only a very small chunk is in UST. Of course, we also have our one Fox, which is pegged as well. But the idea might be over time, or even maybe starting soon, to maybe we move some of that USDC to DAI, just to create a more diversified basket of stables. I don't know that I would want to do too much DAI initially. DAI has its own set of risks for sure. It's far more decentralized. And it has a lot of Lindy effect going on. It's kicking ass. It survived some serious turmoil, like the meltdown, the COVID meltdown in March 2020. There were some very dicey moments there. But there are those risks, higher risks of having it depegged and things like that. But it was kind of just a thought that crossed my mind. And yeah, great point, John. Fei and Frax could be considered as well. Fei certainly has the nice property of, we use Rari loans already. And Willie, you make a great point. It's almost like face palming, and I think this number is down a little bit, but it's still backed 30% by USDC. So yeah. With that in mind, okay, we have some overlapping risk there. That's certainly an argument for using something more like Fei. UST, we already have some of that. And that also has its own set of risks. If you listen to some of the maker people, they're absolutely convinced that UST will collapse in a dramatic way, but they've been saying that shit for a year. And with every passing month, Do Kwon is looking, more like the smart guy, and they're, I don't know. I respect the makers guys a lot, but yeah. Anyway, I won't belabor the point too much. It's just something that maybe we can dive into, guys, maybe in the next TMDC. But now that we're sitting on a good amount of value, we have like 4.5 million of US DC in our treasury, if you include what's in our Olympus bond unclaimed. Yeah. And yeah, maybe different ones like AL USD, Alchemix variant. So there's plenty of interesting things. Hey, John. John's up on stage. John just crowd surfed off the stage. Now we have Willie.
I think John,
hello, gentlemen.
John, we can't hear you unless you're trolling us. In which case, well played, sir. But yeah, I agree. I've been thinking about it too, and it's really one of the most, I don't want to say existential risks to the DAO, because it's not gonna, they can't stop us, but they could freeze, our stable treasury right now, which is entirely denominated in USDC. So I'm glad you're thinking about it, and I do think it's worth at least considering diversifying. And it's tough because there are trade-offs. So maybe it is worth, instead of putting all of our eggs in any given stablecoin basket, at least diversifying so that we're not we're not accepting just one trade-off, but we're kind of diversified with the risk.
Can you guys hear me now? Sorry,
we can hear you.
Phone issues. Yeah, so yeah, I think it's a great topic. And yeah, we just had a little bit of discussion there in the stage chat. I generally am supportive of the idea of some amount of diversification, although definitely requires more discussion and deliberation about which things we want to take. And like every one of these has some sort of risk, whether decentralized or not. So, I mean, the downside is, if we have a whole basket of stablecoins, we're also exposed to more risks, although less of each one. So like, the USDC is kind of a binary. They either will attack us or not, basically, at some point. But each one of these we add is additional attack vectors for that particular risk. I guess one thing I was just going to say is I think one of the reasons that we hold mostly USDC right now, it is the preferred asset, the preferred stable asset for most of our contributors, especially in the work streams, from what I understand. So I'd be more comfortable with us holding a bunch of others, although we can always transfer, we could always trade these when we need to. If workstream contributors were actually open to other stables than USDC. But I think that's one of the primary reasons we're doing it that way. So I think this is something where I would actually like to hear from contributors in the DAO if they are open and willing to take payment in non-USDC stables, because that's I think one of the main drivers behind that right now.
It could also be the case where, thinking through a scenario where the USDC was frozen, even if it was something that happened temporary, it was like a temporary thing, and maybe a month later it was unfrozen, it would really freeze up our operations potentially during that time period. So maybe it would, and kind of to your point, John, about different risks introduced by other stable coins. Maybe if it's just something like, okay, we have our stack of USDC and, maybe 80% is in USDC. That's what's being used for payroll every month per what people are used to. It works well. But then just having that sort of, alternative waiting on the sidelines if something shitty did happen. If we have $500,000 of Fay and $500,000 of something else, or, just something to at least provide us some wiggle room and a little bit of, the ability to actually function in the event that that funds did get frozen by Circle.
Yep, it all makes sense. I just think we need to consider some of these inputs and decide what risk levels with which assets, how to do that diversification, if we can save ourselves on the back and forth of constantly having to switch out the stables every time we, do payroll or something like that. Those are some of the considerations that I'd like to consider. I will say, for whatever it's worth, I think it's very unlikely that Circle is going to start freezing the USDC of DAOs anytime soon or with no warning. It's possible, but very unlikely, because they would start tanking their own use of their asset throughout all of DeFi. So they don't have a lot of incentive to want to do that. But of course, they could be forced into it, and that's the risk.
For sure. Yeah, good stuff. We can give this some more thought. The nice thing is Curve makes it so easy and efficient just to swap between these different stables. And it's really cool that we're kind of at the point where we can really think about this now, considering that we really started from pretty much zero stablecoin exposure, and now we have a nice stack. And another thing to consider is whether or not we should bump up our goal. Our goal has been 10 million or 10 million stablecoin. $10 million worth of stablecoins in our treasury. And that was predicated on the idea that we want to survive a 18-month bear market at a monthly spend of $500,000 for payroll and contributions. Of course, that amount of, or our monthly budget has increased a fair amount. What are we in, like the $700,000 to $800,000 a month range? That is an argument to perhaps increase our goal. It's either that, or we're looking at a situation of like having to implement budget cuts down the road in a bear market, which isn't the most desirable. But that's another thing that has been bouncing around my head, is modifying or raising that goal in response to our increasing monthly spend.
Yeah, it's a good question. I think we need to get to our goal before we can consider raising it. We're not there quite yet.
This is true.
I think there's also a larger discussion to be had. this is actually something I want to bring up. I don't want to tangent us too much, and maybe this is better for a future tokenomics call, but I know I've seen Josh talk about it some, but I do think we need to have at some time, a larger discussion among the DAO just about the general monthly budget, and, just making sure that doesn't keep growing, infinitely, and that we feel like, as a DAO, that we are getting the right amount of productivity and resource from the amount that we're spending every month. Because that amount is starting to get quite high. I don't think it's necessarily bad or wrong for that to happen, but it's something that all Fox holders should be paying attention to, and something I think we need to develop some sort of process of how we decide when we need to cut back on various budgets or not, and when that's appropriate. And I'm not really even sure what that discussion looks like yet, but it is something that is increasingly on my mind as that budget keeps increasing.
Likewise, and it is quite relevant to tokenomics. It's a lot, I think, easier just to add things to the budget than take them off. Once people are working with the DAO, and once funds have been committed, and people are, assuming that they're going to get a certain amount for XYZ task, taking that away is a lot more difficult than just methodically deciding what to add over time. Here in this tokenomics, in this work stream, tokenomics is not particularly budget intensive, which is nice. Of course, it's tricky for say engineering and marketing. There's more contributors, but yeah, we need a community process for deliberating on this. And to be frank, if the market continues to suck or it sucks worse, there will have to be tough decisions in terms of okay, hey, well, maybe we shouldn't be approving this sort of thing. Maybe it doesn't fit our current paradigm. Just kind of putting on the conservatively or the fiscal conservative hat.
Yeah, exactly. Again, I'm not recommending any immediate changes, just that this is something I've seen come up more in discussion from other DAO members, and I think it is definitely something that in tokenomics we should be paying more attention to and decide, because you're right. It's always easy for people to approve to add things, and it's always very difficult to take them away, and that's the case with any budgeting process, DAO or not. But it's something where I think we just need to develop a good muscle as a community of making sure we're using our resources efficiently and deciding where and when we need to cut back in certain ways and how to do that. Because I don't know. I don't want to target specific spend or work streams or contributors or anything like that. It needs to be a more DAO-wide discussion of how those things are approached. So yeah, I don't think we need to spend too much on this topic, but it's something that I've seen some conversations bubbling up on, and is certainly worth token holders paying attention to.
Yeah, thanks for bringing that up, John. Cool. So yeah, glad to hear you guys have some thoughts on the stablecoin diversification angle. I think that'll be good fodder for more discussion soon. On another TMDC note, Rotorless has driven this process whereby the TMDC is requesting another 60 million Fox to allocate towards different things. This has been in incubation, and it will soon be in ideation. I think initially it started out in incubation, even though it was already in the proposal discussions forum. It'll probably just appear there since that's sort of our canonical ideation forum. But that will be heading into ideation soon, and then subsequently, assuming the feedback is good, we'll have a vote on that after about 5 or 6 days. So, kind of one of the important things to think about here is it's always good to be skeptical in crypto and DeFi, and wearing your skeptical hat, you might say, okay, TMDC, well, why should we give you another 60 million Fox? And that's exactly the question I would ask of the TMDC. So that sort of begs the question, what are the TMDC's actions thus far, and really, what are its results? The nice thing is we are able to track this. Of course, everything we do is on chain in terms of the positioning, which makes it easy for tracking. I don't want to say easy, but makes tracking very, very possible. It is important to be able to do this as we add more positions. So Josh AF, has been, or was cool enough to put together a spreadsheet, spent a lot of time really deep diving and making sure he grabbed all the different actions we took, and then also thinking through the results. And he has a spreadsheet that really summarizes all that, and it speaks directly to our request for the 60 million Fox, and it's linked in that proposal. So yeah, somebody last week had the idea to maybe just walk through that at a high level, and there's no better person to do that than my man Josh. Hey, Josh.
Hey, everybody. Yep, I just shared it in the Zoom link that's in the stage chat. So if you open that up, I'm sharing my screen there. And there's two sheets to review. One is the first one is the Fox allocations. This is the Fox that we have allocated. And then the next sheet that I'll review is the Fox allocation results. What have we gotten as a result of those allocations? So Fox allocations, the biggest allocation that we've issued is for the Olympus Bond USDC program. And now I did refresh this information up till today. So as you can see, we've contributed a little over 18 million Fox to this bond program. To be clear, that does not include the Fox that has gone towards the ETH Fox LP bond program. And also, since March 23rd, half of the USDC bond program is an allocation from the Olympus Bond Committee that is used to contribute to the Angel Vault. So this is only the Fox that is the result of the TMDC's allocation. And then we did this liquidity as a service program for, whatever we got here, a total of around 6-7 million Fox. And then we got 2.5 million Fox back. We got some Tribe as rewards for doing that. We did a token swap where we gave 4 million Fox and we got 44,000 toke. We spent 50,000 Fox on the Silo investment. I think we got 2 million. That's actually on the other page, how much Silo we got. We spent 8 million Fox on the One Fox strategy contract. So that was to get the One Fox, the original One Fox minted and reserves in place so that One Fox could work. And then we did a bunch of stuff here for the One Fox treasury and for some of the liquidity pools to be able to power the Angel Vault. Rari collateral, actually, so I lied. This is the biggest Fox we did. Is we put up 23 million Fox for collateral in Rari to be able to borrow from Rari. And then we did some Angel Vault rewards on Rari, rewarding people for putting their Angel Vault tokens up on Rari as collateral. Another one here for the One Fox USDC pool for the Angel Vault to work. And then the most recent one that just happened either yesterday or today is we allocated a bunch of Fox for the Hedgie sale. So total is actually, we're a little, and this was news to me as I put all this together today, so it could be news to others on the TMDC that we're a little bit over our initial allocation of 60 million Fox.
I knew we were bumping up against it. So we need that proposal hopefully to pass shortly here.
Yeah. Any questions about this? I'll go on to the results. But any questions about this? I'll check the stage chat too. Ooh, there's a lot in the stage chat. Anyone aware of a question in the stage chat that I should answer?
So Ron raises a good question here. He says, so with the amount that's going over, would that then come out of the next proposal should it pass?
I would say it should, yes.
Agreed.
So it won't be 60 million in addition to what we've allocated so far, it will be 60 million plus 60 million, which would make 120 million Fox total.
I realize I'm on stage still too, and I think with a lot of that Fox is in Rari. It's probably one of the biggest deposits, and I know the TMDC had initially approved a certain amount, and then I think part of the reason that we also went over is that we had to then deposit, or we chose to deposit extra Fox just to really protect our position there and ensure that we weren't at any risk of getting liquidated. So that was also kind of like a protective measure that we had already kind of agreed that we would implement, but also was difficult to budget and wasn't accounted for that first TMDC approval. And you guys didn't say, hey, let's deposit 23 million Fox. It was like you deposited a lower amount and we deposited more.
Yeah, it's when Fox started to get towards 20 cents, I remember we decided to just throw in a bunch more. And so some of that we could actually pull out. But
I think it's fine to leave it for sure.
Yeah.
But yeah, I just wanted to point that out. I think I agree that it makes sense to just kind of account for it if this next proposal gets passed.
GK, what do you mean? Would you start fresh on the 60 million Fox allocation? That is the past versus what you're looking to do next. I mean, one of the things is we'll continue the Olympus Bond USDC program. If this hedgy thing works, if this works, I could see lowering the Olympus bonds and increasing hedgy sales because I really like the 18-month lockup over a 1-week lockup. I think that could just make a much bigger difference for us. And so anyway, something to think about, something I'm watching with this hedgy sale.
My thoughts exactly, Josh. That would be that could be really nice. So hey, if this 500,000 sale goes well and there's plenty of demand and everything is smooth, like, you know, maybe we target another, we do like 1 million or 2 million. I mean, really, assuming there is enough demand, like we could quickly approximate our initial 10 million goal very quickly with hedging. You know, we're already starting in a good place. So this is going to be super exciting to see. And then, yeah, in terms of Rari, for anybody who's not familiar with this dynamic, it's pretty straightforward. You know, you see a lot of this in DeFi. We need to keep our position sufficiently collateralized in terms of the USD value that we put in there at Fox. Of course, as Fox drops, that position declines. And if it were to drop to a certain level, if we didn't have enough Fox in there, we would get wiped out. We've been very cautious with that. I mean, I believe we have enough down to like, 7 cents right now or something, which fortunately the market and Fox has sprung off those relative lows. But this is crypto; anything could happen. So it's one of the things that the TMDC does, in addition to making these allocations and the positioning throughout DeFi, is also just very carefully watching the status of our different positions and managing risk.
All right, let's look at the results. What's happened as a result of this? So the USDC that we've accrued from the bond program, that's also does not include the USDC from the Olympus Bond Committee. So 5.5 million in USDC bonds, and right, so we've spent 18.8 million Fox, which is garnered us 5.5 million in USDC. We've borrowed FEI, a stable coin, from the Rari pool, and it's currently still outstanding, and that's at 4.5%. We have V2 liquidity from the liquidity as a service, so that's helping with grease the Fox markets. Tribe rewards, we've gained a little bit of Tribe. Actually, these numbers, I don't know what Tribe's currently trading at, so this is assuming 57 cents per Tribe. I'm not sure if that's correct. Toke also, this is less now because Toke is trading well below $27. So that's a smaller number. We got the silo token. We have a 1Fox USDC liquidity pool position. We've got some arbitrage gains. This may be greater. I'm actually don't know if we've done any more. Didn't have time to research that. And then we have some 1Fox Angel Vault LP. And I actually need to get clear with Willie. Some of this may be attributed to the bond program that is not attributed to the TMDC. It's getting a little confusing with multiple initiatives, both using the USDC Olympus bond program, but this is pretty close. So roughly $8.5 million of assets acquired, $4.5 million of liquidity, 1.7 million in stable coins borrowed is what we've done with the 64 million Fox thus far.
Great summary, Josh. And then this will be, this sort of tracking will also be carrying on into subsequent months of the TMDC's activity, assuming that we in fact do get our allocation of the next 60 million. In fact, it is, it's required of the TMDC per the second proposal, which was basically kind of like introducing the first non-beta, for lack of a better term, sort of phase of the TMDC, outlining the new community members. So every month we have to be reporting on that. So this spreadsheet allows us to do that. And Josh, you're a rock star for being so detail oriented and tracking all this down.
Thanks, Ken.
So yeah, give that proposal a look as it heads into ideation. You know, if you guys are ever interested in what we're doing, remember we always meet the TMDC. We meet at 3:30 prior to this meeting in the Tokenomics Workstream channel. You can always jump in there and listen in. This is full transparency. We do this out in the open. And yeah, so thanks again, Josh. Really appreciate that. Okay, so let's see here, 4:35. That's actually it for the main stuff. The last agenda item is pertaining to Ichi. So we talked about this last week, but there was still some discussion about this, and different community members were wanting to just maybe, it's had a sort of meteoric rise in its price, going into the, like from like 4 to something like 130, and then subsequently collapsed in a pretty dramatic way. Last I checked this morning, it was like at $8. Looking at why this happened, it was very clear that there had been some very unwise management, I think, of their Rari pool, and also the size of their buy wall relative to their market cap was not tenable as it grew. So kind of the question that follows on from that is, well, okay, wait, we're using Angel Vault ourselves. We have 1Fox, and what does that mean for ShapeShift? As we kind of talked about last week, it's my opinion that I think this presents certainly a cautionary tale in how not to handle these pieces of DeFi technology. You can do something very unwise and maybe goose the price in the short term to astronomical levels, but it's going to ruin your credibility, perhaps. Not to say Ichi doesn't have credibility, but it's a short term thing, and the approach that we employ here at ShapeShift is we're always looking to add long term value and not opting for short term gains at the expense of the long term. This has been a guiding light, a guiding principle ever since this work stream started. But of course, it's certainly a little bit freaky. You see, okay, wait, we're using Ichi, and now that the price is down, what's going on? But yeah, Hunt and PTT had some thoughts as well, and certainly wanted to give them a chance to come up and chat. Hey guys.
Hey, yeah, we were trying to put something together last week for the a bond committee to get together and talk about the Ichi stuff. I know Hunt had some concerns that he wanted to bring forth, and I think that this might even be a better venue for that, as there'd be more people here and to discuss it. So.
Yeah, I don't want to. I like want to highlight that I don't want to like sit up here and FUD anything or like make anything like seem like doom and gloom for like that whole project or anything. But I think it's like worth the community like maybe discussing like a little bit like amongst like everyone, not just like committee, like bond committee or like TMDC or whoever. Like the current Angel Vault strategy, and like maybe try to limit like putting more skin in the game, possibly. But yeah, I asked Willie to come up here and possibly give some insight on that. Maybe some insight on the bonus, I guess, if we were to hit a certain milestone on liquidity on Ichi, what the current status of that is, and like what our incentive is to move forward, and like put more risk out, like rather than trying to mitigate risk, especially in like a time that's like questionable, arguably.
Yeah, thanks Hunt, for bringing this up and for inviting me to speak on it. Regarding the milestone, I followed up with Ichi about that and haven't heard back yet. But I basically reached out and said, hey, glad you guys are getting support from the community and pushing forward. Wanted to get clarity on Ichi's market maker offer, and we've assumed that you guys are focused on other things and would like to forget about the deal for now, which we'd understand, but wanted to confirm rather than assume. So I think it's safe to assume that market maker offer is probably off the table, which is unfortunate, but also understandable. So we'll wait for confirmation there, but I think that's a safe assumption. Yeah, in terms of, so one thing I do want to make sure is clear is that the contracts that we're using from Ichi, the one token contract and the Angel Vault contract, those are deployed contracts. Ichi does not have the ability to like upgrade those contracts or rug us, basically. And the DAO is actually the admin of those contracts. So Ichi's price, Ichi's future really has no impact on the continuity of those contracts. So I think maybe the question, Hunt, if I understand better, is just like, I think we're just maybe worried about Ichi's reputation and how that might, and how ShapeShift being associated with Ichi might impact the DAO.
Yeah, on him and like just cut off like a relationship it's like reasonable to probably question quickly.
Yeah, so right now the Angel Vaults are live, incentives to deposit into the Angel Vault. There's also incentives on the Rari pool to deposit Angel Vault as collateral there. And the TMDC, or I guess it was the the Olympus Bond Committee had approved taking 50% of the USDC bond proceeds and allocating that towards liquidity in the Angel Vault. And if you recall, the reason we had done this was that the community had already approved increasing the Fox ETH bond purchases through the bond program as a means to increase protocol on liquidity, and really with the ultimate goal of weaning ourselves off of expensive liquidity mining, so the DAO could own liquidity and have the necessary liquidity without having to pay ongoing expensive rental costs, which is what liquidity mining essentially is. We're experimenting with a few things, and we basically had a discussion with on previous tokenomics calls and with the bond committee to experiment with increasing the USDC bonds to add to the Angel Vault. I actually think that's a pretty cool strategy. I think one of the reasons that it's an interesting strategy is that we're spending Fox right now to acquire liquidity, and the Fox that we're putting out there, what we've seen from these Olympus bond programs is that a significant portion of that Fox just gets sold on the market to then buy the assets necessarily to sell into the bond program. So before that was Fox ETH LP. We've since ended that program. We've launched an ETH bond at 50% of the Fox allocated to it, Fox budgeted for it as the Fox ETH program. And then we doubled the USDC bonds and decided to take half of those proceeds and put them into the Angel Vault. I actually think that's a good strategy. And I don't think like what's happened with Ichi, I think is a good warning lesson for us to be very careful with our Rari pool and to make sure that we don't get into a situation where people are the majority of the Angel Vault deposits are all based on leverage, and people are being highly risky with their leverage. And most importantly, don't get into a situation where there's bad debt, where if the existing loans were to get liquidated, and that would cause too much sell pressure on Fox that there wouldn't be enough liquidity. That's the disaster that we need to be careful for. But we're not at risk for that. We should be very cognizant of that and make sure that we don't do that. But that's what happened. That's what went wrong with Ichi. It wasn't the one token protocol didn't fail. The Angel protocol didn't fail. It was specifically what happened on the Rari pool, which was, I like the Ichi team, but they made some poor decisions in configuring their Rari pool, and there were some pretty big red flags that should have been addressed and that they could have mitigated if they had made different decisions. And we're learning from that. So the community can decide to cancel these programs or to not, or the bond committee can even decide to not continue allocating to it. But I still actually think that in terms of protocol and liquidity, there's a lot of benefits. As long as we're using these bond programs to acquire protocol and liquidity, there's actually a lot of benefits to buying stable coins, minting for every $1 of stable coins you buy, minting $1.20 of one Fox, and then depositing that right below and concentrated below the price. And if we are planning to do long-term protocol and liquidity, which it seems like we are, it's much more capitally efficient for the DAO to be able to have the liquidity that we own be concentrated where we want it on Uniswap v3 versus spread across the range on Uniswap v2 to infinity. If we do that, there's a lot of capital that's never used. It's never the liquidity sitting on the edges of these ranges where the price never goes, and that liquidity could otherwise be put to work in other ways. So those are my high-level thoughts. I know I talked a lot there, but what do you think about all that?
I appreciate it. Yeah, that's one of the main reasons that Ron and I wanted to get up here. It's because all right, we could make the bond committee could make this decision, but it's a relatively it would be us basically reverting on a choice that we made before this Ichi event happened. So I think it's it was a hard vote for me then, even before the Ichi incident that was recent happened. So it's still it's still on my mind. If I were to have to go back and make that vote, I would definitely not have done it. So I wanted community input on, I guess, moving forward, because at the end of the day, I still consider these buy walls effectively guaranteed exit liquidity for a whale. At the end of the day, that's just how I see it. And it's really hard for me to think that it's the solution to our problems with liquidity when it's blaring right in my face this whole time for months, probably annoying a lot of people in DMs about it, but it's still there. So I just wanted to bring it up.
Yeah, no, I appreciate you bringing the concerns. We should definitely have these discussions. None of these strategies are risk-free, right? Yeah, I know. I'm curious, first of all, I guess, do you see Pool 2 protocol and liquidity? If the DAO owns, ETH or Fox or is incentivizing ETH Fox liquidity on Uniswap v2, how is that different than, how is that not just the same kind of exit liquidity for whales?
I mean, I guess you could argue it is, but it just seems there's more risks involved with just it's not just it being exit liquidity. That's the problem, and that's why I don't want to FUD too hard, but I do have there are other concerns, reasonably speaking, just with I do have concerns that the team might be a little bit distracted with current happenings and stuff, and I don't want anybody to make further mistakes and stuff like that. So I do have concerns that are not necessarily they're product related, I guess. I don't know. I just feel if I were to have to make the vote again, it would be tough to make the vote. So I just wanted to let the community know what we're trying to figure out.
At the end of the day, could we take these contracts and build an interface on our platform and basically detach it from the Ichi name?
We could. The one thing that I will be transparent about is I don't understand how to operate the Angel Vault, and I also don't to do transactions on the One Fox strategy. I think we could learn that stuff, but right now we are dependent on Ichi for setting up and queuing up a lot of these transactions for us and managing the Angel Vault, which is a benefit. I see it as a benefit that they are managing it and that we don't have to do that right now. We certainly could. But I think it's a valid concern that is Ichi team going to have enough time to actually focus on this? What I'll say is that they've signaled to us that they get going forward. This is going to be their top priority. We have seen there was a little bit, especially when the couple of days while they were going through the fiasco, that it was hard for us to get a hold of them and get the necessary transactions executed. So we kind of got a taste of what that was like. But since then, they've been more responsive and been doing their job, frankly. And we certainly could learn how to manage those contracts ourselves in the event that each team went away. Yeah, I forgot what else I was going to say, but I think that at least answers part of it.
Would it be worthwhile for the tokenomic workstream to maybe put a bounty for someone to spend that time to figure that out? And then that way we don't have to have that reliance on them. And then it could also save that brand PR stuff in case there is a total wipeout at some point here.
Potentially, and that reminds me of what I was going to say. So yeah, the Ichi team has signaled that their top priority going forward is going to be to support their partners, not just to make Ichi number go up like they were pretty focused on before, but really supporting their partners. I don't have any reason to believe, and they've also signaled that they're very, very confident that they're going to be able to continue operating, and that investors are stepping up to support them. Other projects in the space, well-known projects in the space, are stepping up to support them. So, and I don't think that they're lying to us. So I think like it's a good question. And I think maybe it's possible that we might decide it makes sense to do that. But I also don't think they're just going to disappear. The founders, it's not an anonymous team. They're a public team. And everything I've seen so far shows that they're going to continue operating, and they're going to work to support their partner projects. And until we have reason to believe otherwise, I don't know if I still appreciate the benefits of them managing these angel vaults and setting up the transactions for us. But it's something to consider, and I wouldn't fight against us prioritizing figuring out how to manage this stuff ourselves. But maybe what I would suggest is let's learn how to do it, but let's not also say that we need to take over it.
I guess you're saying that you reached out and asked about if that market maker offer was still on the table, and they just haven't responded at all since then. And to me, that's a little bit worrying.
I DM'd that to Brian. We've been talking to, but who has been talking to us every week is Nick, who manages the vaults and the rights to Solidity.
Hey, thanks for getting up here so quickly, Willie. But yeah, I don't want to take up like this whole meeting, I guess. Definitely appreciate it.
Yeah, thanks for broaching this subject, guys. I think it's important to avoid groupthink. It's like, I mean, I'll be honest, I shared some concerns as well with respect to the initial messaging behind Angel Vault in terms of kind of the way it was being pitched is like, hey guys, bear markets are a thing of the past because you could just add this thing. And it struck me as like financial alchemy. It turned me off like big time initially. And it wasn't until kind of Willie walked me through what was actually happening and some of the details. I'm like, okay, this actually makes sense despite the way they were pitching it, which is like, it just didn't make a damn bit of sense. But really, thanks you guys for kind of just, voicing those concerns. I think, John, you had some thoughts, and I see Jordan on stage as well.
Yeah, I'll go here, and I'm curious to hear what Jordan has to say. But I just wanted to add on. I think it's a good thing to be discussing these things. I was another definitely skeptic of the Angel Vault at first, but have been slowly converted and actually watching it on chain for the last few weeks. You can definitely see how we like if you look at Fox since we instituted the Angel Vault in more significant capacity, the on-chain results do speak for themselves in the sense that our correlation with ETH has broken a little bit, meaning we've outperformed a lot more often than we did before. And I can see on chain the effect of the Angel Vault has on that. That being said, I've always been a thought that there are certain risks, and that basically the way that the DAO, in my opinion, to kind of reframe this a little bit, should think about protocol and liquidity is one way or another. The question is, when is the protocol willing to buy Fox? And at what price and how? And I think that is something that the DAO should generally be willing to do. Like, when does it want to buy back Fox for various purposes? And, there's other methods of doing that, such as what's going to, happen with the Foxy rebases, which is a pretty sustainable method of that. And, gives yield to people who help. So with, to Willie's point, with the Angel Vault, the idea is you're more just concentrating that bid better. You're trying to be more efficient with that liquidity. And I do think we have seen some positive results of that, the whole Ichi price fiasco of their token aside. But I do think it has diminishing returns as you go on. So like my suggestion, and I'd love to have maybe a more concerted meeting with the bond committee about this, because I know the meeting we were going to have last week got rescheduled or pushed off. But I think there's strategies that could be put in place to mitigate against some of those negative externalities. Basically, like, we can be more conscious about we want the Angel Vault to basically, like right now, I think we're a low enough market cap that basically bidding like right below price for our own token makes sense. But the more that market cap increases, the more there's a diminishing return, and the more arguably, the wall should be moved further and further off the price, something Ichi was not doing. So like you don't necessarily always want the bid right below the price as the market cap grows. So there's an argument that like we could set a strategy in advance, for example, of like when market cap reaches 150 million or 200 million over time, move whatever Angel Vault liquidity we have, 10 or 20% off the price or whatever strategy we set, and stick to that strategy or adjust it as needed. But basically what I think it comes down to Willie's point, is trying to be smarter with our bid on our own protocol and liquidity. And when we do it with ETH Fox LP, which I'm still, bullish on in a different sense, and I'm glad that the DAO owns a portion of that, you're basically bidding on the infinite curve. You're basically willing to buy, at any price rather than at a concentrated price. And that helps kind of spread out the risk some, but it also means it's much less capital efficient. So I think there's space for both of those. But I just wanted to throw that out there that like when we're thinking about protocol owned liquidity, what we should be thinking about is when do we as members of the DAO and token holders think it's appropriate for the DAO to be buying back Fox? Because that's essentially what's happening in one form or another. And I think there is absolutely a smart place for that, but we need to think about what that strategy is and probably alter the strategy as the facts on the ground change, such as the Fox market cap.
Well said, John. So yeah, one other thing I want to add just around like the control of these contracts. So I know for a fact that the DAO is the like ultimate admin of the one Fox contract. So there's a multi-sig on one Fox that's for ShapeShift members to Ichi members. But Mr. Nerdhair also made sure that we had it set up so that the DAO is ultimately like the admin role and could execute transactions on the one Fox Gnosis safe. Specifically, what I don't know how to do is how to like just to set up the transactions for the one Fox strategy, because it's like one Gnosis safe executing transactions on another contract, and it's just tricky to set those up. So Nick's always set those up, but I am confident we could figure out how to do it. Even without their help, I think we could figure out how to do it. Another thing, the Angel Vaults, I know that Mr. Nerdhair looked at those contracts, and I'm pretty sure that the DAO is also the admin of those. But we should confirm that. But one thing with these Angel Vaults, I know that Ichi is working on there. I think the contracts are already in the audit of like making it so that there's public contracts that have permission functions where they can only call like, rebase or just or rebalance within these, like the calls that we would basically be making as humans. Those will be codified and enabled so that anybody can basically like call these poke functions. Or potentially it'll be like a permission. Maybe we can set up like a bot that will call these poke functions. To be honest, I don't fully understand, but I do know that those are coming, and that that should be another way for the DAO to be able to still kind of manage these contracts without having to rely on Ichi. But I do want to say I'm pretty confident that there's not any way that Ichi could like rug us currently. But defer to Mr. Nerdhair, who reviewed the contracts in depth.
I just was going to add that even if they couldn't maliciously rug us, like just the bus factor, like there's one person we rely on basically to formulate the transactions, like that, something we should maybe look at. And I'm sure they might have documentation that would outline how to do that, or we could write our own. But it probably would be good for us to understand that, not from a malicious standpoint, but just even from like a, hey, who knows what happens to anyone on a daily basis standpoint.
For sure, I would definitely feel more comfortable if we did know how to do all that ourselves.
I think also with the Olympus bonds as well, that would be a good idea.
Yeah, good point.
If I could take this time to hop in, thanks for inviting me up here, guys. My question was, who at the end of the day is responsible for the convertibility of one Fox back into USDC? Does that sit on Ichi's shoulders, ShapeShift shoulders, or both?
Yeah, so right now, you can redeem just on the contract level. As long as there's USDC reserves in the contract, then nobody can stop you from redeeming your one Fox for USDC. Right now, there's a one Fox multi-sig that basically can take the funds in the reserves and deploy them into strategies to like generate yield. which is one of the cool things about the one token. That's the 4 of 6 multisig that the DAO can also override basically and has like ultimate admin control over. I think the idea too, I don't think this was ever implemented, but part of the idea always, like the vision that Ichi pitched us on, was that one Fox itself could be a governance token over the one Fox treasury. I don't think that's ever been implemented, but I mean, we could do it because one Fox is a token. We could use snapshot governance and set up like a safe snap on that Gnosis safe. So it is something that could be implemented, but it just hasn't been a big need for it yet.
Gotcha. So my question was mostly around who is socially responsible for the backing of the one Fox token. So if one Fox, or keeping the peg, right, of the one Fox token. And the reason I'm asking is because every time you do one of these arbitrage transactions where you're minting more one Fox with Fox and then USDC, what you're doing is you're increasing like if it's ShapeShift, then you're increasing ShapeShift's like debt position, because at the end of the day, if ShapeShift is responsible for maintaining the peg, then they're responsible for, you know, keeping enough collateral behind the one Fox, like the stable coin, and making sure it keeps its value. So I know I've heard the word arbitrage being used a lot when that type of transaction is happening, and it's being used to put USDC on ShapeShift's balance sheet. But I think it's important to keep in mind that if ShapeShift is responsible for maintaining that peg, then what they're really doing is increasing a debt position that will eventually need to be repaid if people want to convert one Fox. So it's just something to consider. I don't want to take too much time.
No, it's a really good question, Jordan. I think that, in my opinion, I'm curious, Willie, on your view on this, but I think it is up to ShapeShift, who does have the signers that control that treasury, to pay attention and maintain that peg. And so far, I've done a pretty good job of that. You're right that there is effectively debt that is taken out by the treasury. And the stat that I always try to pay attention to is, out of the outstanding one Fox, how much of it is actually owned directly by the protocol and how much is not owned by the protocol. And the main thing that I'm always concerned with is to make sure that the convertibility of one Fox to USDC, while we have this protocol running, that anything that is not owned by the protocol basically should be as well backed as possible at all times. In worst case, if everyone that was not the protocol wanted to cash out and the protocol was left holding one Fox, the protocol could actually basically burn it back, get rid of its debt, basically not redeem any USDC, and take its Fox out that is backing that. And the peg would still hold, more or less, and no one would be out any USDC. So the important thing is not how much USDC is backing the outstanding one Fox, but how much is actually owned by the protocol itself and could basically be burned at any time. Because that is effectively the debt position.
Great point. I also did forget to add, I was going to add this at the beginning and I forgot, that I do think you guys are doing a really great job of managing that risk, and the Ichi tools are really powerful tools that can be used for good as you guys are using them. So yeah, 2 thumbs up from me.